Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw sellers active on the move back up into the 44.75 to 46.75 area. And at this point, heading into the open, the market continues to be fairly balanced. One thing to keep in mind is that yesterday we saw a lot of negative tick extremes on the NYSE tick, and that can mark exhaustion. So if we fail to get follow through today on the downside, then we can get an upside move back into the 55.75 to 57.75 and the 60 quarter to 61.75. Of course, we would have to see a lot of upside momentum, and we'd have to clear the short-term resistance at 44.75 to 46.75 in order for that to happen. But if we fail to go lower and we're actually holding above the 31.75 to 32 quarter pre-market support, and the market just cannot go any lower, then that can trigger an upside move. We have to be fairly nimble and flexible with our intraday bias because we are in this environment where there is a lot of volatility in both directions, and on the larger time frames, we're still very balanced within a big range. So heading into the open, even though the sell side has been more dominant in the overnight session, we have to be very flexible. It's also rollover today, which can add to the short-term choppiness of the market. So, we just want to be a little bit more selective and aware of trade location on the trades that are being taken today. So on the downside, we have the gap fill at 34 quarter, the pre-market support at 31.75 to 32 quarter, and then initial support at 26.5 to 28.5. Now, if we are really going to get an upside move, ideally you want to see the market holding the pre-market support zone, and a break below that would mark a break below yesterday's VPOC, and in that case we may actually extend the range further lower into the 20 quarter to 22.75 support, and possibly 16 quarter to 17 quarter, and responsive buyers can still be active on first test of the support zones below yesterday's low of 26.5. On the upside, if we can break out above 44.75 to 46.75, and we're doing it on some decent upside momentum, then we can go higher and test those zones at 55.75 to 57.75 and 60 quarter to 61.75. We do have short-term resistance at 49.75 to 50.75 in between, but whether we trade that zone or not is really going to depend on the level of momentum we're seeing and just how exhausted the market is heading into it. So if the market ends up balancing near the initial resistance zone and then breaks out, then we're probably going to skip 49.75 to 50.75. Given that we are trading in this bigger balance, even a breakout above initial resistance can still attract responsive sellers as the market gets exhausted into those upper resistance zones. But we do have to be, like I said, flexible with our intraday bias, and we're going to gauge, whether it's worthwhile to short any of those zones depending on the level of momentum we are seeing on the upside. If we're going up on, positive 1,000 to 1,200 tick readings, then it tells you that, we're getting some very aggressive buying, and it's probably not a good idea to step in front of that. But if we're going up on fairly average momentum, plus 500 to 700 on the tick, then it tells you that there isn't any overly aggressive buying taking place. It's just very normal ebb and flow, in which case we can still expect responsive sellers to be active at resistance. So at this point, heading into the open, the sell side is more dominant, and after yesterday's sell-off, we know that there is some weakness in this market, but we just want to have that flexibility that if the pre-market support zone begins to hold, or if we are not seeing any continued broad market weakness, then we don't want to be stuck in yesterday's price action. So in order to go lower and extend the range lower and really sell off, we are going to have to see weakness on the broader market. We are going to have to see weakness on the advanced decline and some decent downside momentum to carry us lower. That negative tick extreme from yesterday is something to keep note of, simply because it can mark exhaustion, and a lot of times you can get a short-term bounce after we see those kinds of conditions in the market. So those are really the main ideas. heading into the open. Very balanced right now, heading into the open, and that's why we need to be prepared to go long or short depending on how the environment sets up in real time. Again, in order to go lower, we are going to have to see some continued broad market weakness and simply a lack of weakness at 31.75 to 32 quarter or the initial support zone can attract responsive buyers. And then even if we extend the range lower, because we've made such a large move in a very short period of time, responsive buyers can still be active at the support zones below. So those are our main thoughts. Let's see which side steps in and is dominant on the day time frame, and we'll take it from there.